Okay, Monday, 5 March. Here's the composite for tomorrow, Monday. You can see the channeling is what we very well may have right now between 3,000 and this price level about 29.64. Not a particularly good day, and we have 3 days. On Friday was not particularly good. We have 3 wicks, 3 failures to reach and stay at 3,000 for the composite. You can see here some of these uptrend lines. We now have a downtrend line across this top here, spurred from this move higher early in the day that just collapsed and gave it back. This type of behavior becomes characteristic of big reversals. That's the kind of behavior we had on this massive pullback day back here. We the very next day completely reversed that and brought it all the way back up and even higher. That didn't happen after this move higher and collapse. We did not get to that same level, and indeed we've had these wicks below 3,000. So only one touch on 3,000 so far. And this most recent uptrend line here at the bottom, you can see we're now below that. So this looks like rollover potential for the composite. I'd say you have an important level right through here. This 3-stage moving higher on this day was pretty significant, and then the next day pops on above those levels. That kind of enthusiasm for the upside seems to be waning, and like I said, we're below this current uptrend line, and potential for falling over and rolling over this important level here, which is basically the close. This was kind of a breakout level, you can see, and we're back right to it. Could continue to fall, carried down by these this movement here. Also, we were lower here and moving higher. Now we're kind of wedging in this kind of diamond formation and tipping over, falling out the bottom of it. So that's kind of characteristic of a slowdown and rollover top. Have to see what happens with the open, of course, but here's a key level here at 25.74, 29.75 rather, and of course 3,000 is important. 29.95, 29.95. Of course, is where we're topping out, not quite getting back up to 3,000. So all of those levels, pay attention tomorrow. On the open, go to Broadcom. A lot of stuff here, a lot of lines just to show the rollover along the top and the curve upward from the bottom, kind of leading to decision point here. We did get the downside on Broadcom. It was pretty clean. You were fighting between these. It was fighting between these two lines. Get this in here a little better. Opened right on both of them essentially on Thursday and dumped, gave it back, but was still below this top line, which was turned out to be the controlling line, and had a second day down, very weak the whole day. So that broke past 37, and we've been saying that 37, 38, and 36 are key levels for this price action. On this break above 36, those have been referenced multiple times, psychologically are clean. Breaking below 37 just really took this down. So Broadcom, how far does it need to come down, or is it going to give a snapback? Have to see. It could very well give a snapback after a candle like that. The market wants to be a little bit strong. You do have an uptrend line still off of this right here. Maybe it hooks back up, needs to try to hit 37 again. The coincidence of these lines, it could come on up all the way to 37 without violating this downtrend line, or very close to it. Could it do that? Certainly. Give a nice little movement, move back above 36.50, pop on up here to 37. We've seen that after several bad days, which look really terrible to reverse this, Broadcom still has the ability to give counter movements of large significant distance. So you get a counter movement tomorrow off of this uptrend line, off of 36 perhaps, but there's some solid support at the bottom right now for potentially a move back up on Broadcom. Then again, of course, falling below 36, maybe it is going to put another candle on here, come on down here to the 50 and break further down. This is a break level down here right at 35. As you can see here, back here, this began a plunge on this day. I don't want fit to price. Broke this attempted uptrend recovery right at 35 has a huge plunge. So we could be coming on down to 35 below 36. Could do that quickly. 36.50 of course in here. All these 50 levels, half levels are important as well. So either one for Broadcom tomorrow, but you are working on an uptrend still, and might not be ready to give it up immediately. This was a 2-day rise, but once again still fell. Maybe there's another full big day rise in here left in Broadcom before the tip over, if it's going to continue down. So you might get a real nice snapback candle tomorrow for Broadcom. Let's do Netflix. Netflix broke out of 115, went to 118, which is identified as overhead resistance. Wicked off of it, came back down, closed right at 115. So those are still operative levels for tomorrow if it's going to be trading this range. If it's going to be continuing up and be strong above 115, it could break out of 118 and head to 120. Here's another level up here, 121, 122 has been identified also as important levels. So you're looking at $2, 115 to 118, $3, and then $2 important increases in its movement upward. Netflix can still be moving quite well. This give back wick could be a problem. It did give back half of its gains that day, but it still was up and went to the top of that channel and does have the wick out, although the market did get weak by the end of the day. It was a pretty breaky, indecision-y early day for the market on the composite here. Broke, but did end down for the day. And you can see that this increase, this slope here is a little bit of an increase over this slope. Let's see. Well, if we draw it accurately, I guess we don't have that. Top wicks through wicks and touched off of it, but then break lower with some widening action by the end of the day. So does that widen, stay unstable, and move back up because you do have this uptrend here? Or is it the fact the longer term uptrend, basically that action's below it? This is the longer term uptrend we talked about. Which is it? It's going to be right here. No. Right here. We're below this definitely well-defined uptrend line here. Or to the downside of that. It also wicked off of that. And you can see that was a double touch off of the day's action. A single touch off of two lines. The day's action coincident with this uptrend line here. Plummet. Just went right back from that. So will it break down tomorrow? Remains to be seen. The open, these two lines I think would both be in effect for tomorrow for the open. This one would be the more important longer term trend line since it is a longer line. We could be above this and have our action squeezed between this to the downside over here and this to the upside and be in a triangle tomorrow for much of the action early. So we'll do SanDisk here, SanDisk. Just moving up nicely, but it is tending to squeeze into a tip here that could bust out to the upside and come up to 52 and even higher. Actually close this gap. This is the actual place it dropped from. Then again, visually 51, which is the price action it's been flirting with for several days, might finally be considered gap closure on this stock, and a gap and touch off of to the downside, kiss goodbye from 51, or basically this uptrend line here could signal a real nice downside reversal candle, a snapback down to 50. And you get just one really nice falling candle. It can come down really far, depending on whether or not this gap closure is going to, send some more downside in to play. But anyway, 51 is going to be a key level. 50.90 really has been off of this wick here and this close. So it's not quite 51. It looks like 50.90 seems to have some power for SanDisk right now. So you'd want to be paying attention to that top and that close. And of course 51 is still going to have some ability to influence SanDisk. But I'd say definitely got to watch this downtrend line here, or this uptrend line. And you have another line through here that it's wicked above, but the close is on this, defined by a little bit more shallower slope, defined by these tops right there. So wedging into a tip could give a nice peel over when things tend to do that. Back here you can see you can get peel overs for one big candle down, even if it's going to go higher, like this kind of break right here. So we see examples of that all the time, especially on a recovery movement. This is a recovery movement. Back here was recovery movement. See, it went higher, and just broke for one day. So anyway, that can happen. Not perfectly analogous, but SanDisk was kind of weak here toward the end and broke its uptrend on its recovery toward the end of the day. So you can see some of those levels being important tomorrow. You draw horizontal price levels and the close and what it's able to maintain and not. You can see is below that right now. Move on. X. It's going to get too long-winded. Two very nice wicks below critical levels of 28. This downtrend line established by these wicks and the overall controlling long-term trend line. So unlike, well, it's not much different actually from this pop here. Big breakdown. You had an uptrend line on this action back here. You had a downtrend line on the rollover, and you had two candles below the downtrend line and the uptrend. So it popped above that, however, and got strong to the upside. We get the same type of action here. This was not particularly a big candle to the downside, given how important this violation of this long-term uptrend line was after such a big fall. So the fact that it still hasn't gone could be very telling and very significant. But 2750s right here, all this action has been constrained pretty much between 2740, the bottoms on this day, and 28. And yes, we could be rolling over. The open will mean a lot in early price action. 27 is not very far away. Of course, 28 is not either to the upside. 2750 being the key right now for deciding perhaps which way it wants to go. But you could have a bad open or weakness early and plunge on down. Certainly possible if the market is rolling over and tipping over. You could certainly have that. Good potential for X to move quite a lot tomorrow. So might be one to keep an eye on. Definitely one to keep an eye on, actually. Caterpillar has been trading very nicely throughout the day lately. Might be time for a movement back upward off of this important level of 112. This is your controlling line for that. You can get a snapback. CAT is at, it doubled down from, basically had a double top from prior highs right through here. Here is what that double top looked like. I call it a double top because it made new highs right here, basically at 116, slightly over 116. Came below it for a day, went back up to it, and kissed basically those same levels, this recent uptrend line from below, essentially forming a double top up here at this extreme, and has fallen 3 days straight since that time. But you can see where CAT is. That's very nice. That could be a real nice pullback, but it might not give it up immediately. It could play around between 112 and 115, 116 before rolling over, like we see the market has not given a needle top. And if it's going to need to jam higher before coming lower, we haven't gotten any sort of exponential rise before we get a nice clean pullback, if that's what we're going to get. There's no needle top in sight for the market. There may not be for CAT either. It could just channel through this region, but be moving cleanly and well throughout the day. As you can see with CAT's pattern, there's many times in the day when it has been moving very cleanly between price levels and with lots of nice trend lines to be drawn to define its action with very clear break levels and such being important to CAT. So it could be some good trading there with whatever CAT's up to. It's been very clean, which is a nice benefit to a stock. V had a break candle on Friday, could plummet on down below 116, or it could be channeling with 118 in mind. Here are some controlling trend lines for V. But we might be fulfilling to the downside finally on this big candle reversal off these new highs and failure to maintain new highs. Let's take a look here. Best Buy had a bad day and a break candle. Not a break candle, not a break open so much, but a breaking candle to the downside for its action during that day. How far down does it need to come? Don't know. So we'll have to see between these two trend lines right here. This is where it's trapped at the moment. It couldn't maintain 25, and that weakness has persisted. This level right up here. 2450 is it finally breached to the downside, and 24 is not very far below. I could certainly see a scenario with this falling below this levels here. 2450 back down to 24, and perhaps giving a tail off of that for some nice reversal, or even off this uptrend line. This is a big break and fall, and you could very well expect to have some retracement since Best Buy's action, get rid of all of this, Best Buy's action has been constrained between these bounds. Here's essentially the mid-level for that, 24.75. So if you're going to come down and actually hit this uptrend line right here, it could tail off of that, pass its open, whatever that might be, and come up for a nice retracement up to the midline of this price action. That wouldn't be unreasonable at all, so you might very well get that scenario tomorrow. So anyway, that's Best Buy. That might be interesting. Apple could very well be falling back below some of these accelerated uptrend lines. This is quite accelerated, and you get a nice hook candle back down to start a channeling period, especially if the market's getting weak. But that could be a very big candle in a single day for Apple, with Friday's action being extremely constrained. If it can't maintain above this trend line here through this action that it has been living above in kind of a squeezing channel through this, you can see how this is squeezing, but there's basically another channel above this action defined by these tails down here on the bottom portion. So if this is going to channel along here for a while, perhaps between 535 and 550 essentially in this 15-point range for a while, or even 540, gives a real nice breakdown below this line right here tomorrow with the right open and right downside. It could be quite substantial. And of course, Monday's in a precarious position like this with the market, this could be very volatile for any number of things. So let's see. I think that's about it. Those are the most interesting things I see at the moment. XOM in a position to move on higher. This is quite nice. Well behaved right now. And with the oil price issues, oil's continuing to go higher, you can see you actually have a nice tail off of this uptrend line. Good potential to move on back here, going back up above 87, make new highs for XOM. Had a real nice opportunity to fail here, didn't take that, and looks like it might be trying to go higher on the uncertainty in the Gulf and high price oil prices. If Israel attacks Iran, or of course ropes us into it like they're wanting to do. Their citizens had a poll and said basically they don't want to go attack Iran unless they can rope us into it. We can provide support to them, so whatever, see what happens with that. 53 here on AXP. This could breach to the downside, come back down 52 very nicely. You can see the weakness on this uptrend line here, falling back below it, below it, back above it, right back below it. Right here, 53 is key to all of this price action. So a breach of 53 to the downside could be very nice. That could be very, very good. And then of course, here's your uptrend line, or your trend line on the top, where if it were to move back up, it would have to get past, could face some resistance. Any number of things interacting in this space. If there's an open in this space, it wants to live in here. Or if there's an open down, come up here, touch 53, and just drop down 52, drop very nicely. But AXP is showing some vulnerability off of Friday's action. And I think that's the last one I want to talk about. That's it for tonight. Good luck trading tomorrow.